Hi, everyone, and welcome to this episode of the Ncast, a podcast from Ncontracts, the leader in enterprise risk and compliance management solutions. My name is Guy Weissmantel. I lead the marketing team here at Ncontracts, and I can't wait for you all to get into this episode. You know, having just moved to Nashville from Washington State, where cannabis has been legal for several years, I've seen firsthand the challenges that financial institutions are having in working with businesses and startups that are flooding into this marketplace, especially with all of the state and federal laws being all over the place. In today's episode, our own Vice President of Compliance, Stephanie Lyon, will be talking with Tim Rademaker about best practices and considering whether or not you should bank cannabis and the pitfalls of actually no decision being the decision. And I think we found the right person to speak about the subject. Tim's the Vice President of Enterprise Risk Management at CBC Federal Credit Union in California, another state where cannabis has been legal for some time. And there he spearheads their ERM initiatives, particularly as it relates to high risk and cannabis banking. So I can't wait to get into this discussion. Let's get to it.
Tim, welcome to Ncast. I am thrilled to have you as our first interviewee. We all agreed you would be a fantastic guest because of your background in compliance, risk, and of course, your appetite for higher risk areas. Thank you for joining us.
Yeah, it's been a fun time, and Stephanie, it's great to see you. I am thrilled to be here. It's a privilege and an honor.
Thank you, Tim. And talking about non-traditional areas of banking, in a compliance conference not that long ago, you said that most credit unions are already banking marijuana-related businesses, whether they know it or not. So can you tell us what should credit unions do to limit the risk of a negative NCOA examination in light of those opinions or thoughts?
Yeah, I did say that. It's the truth. First thing any credit union needs to do is embrace reality. They are there. You probably don't know. It's better that you find them than the regulator. And the first thing you need to do is a risk assessment and identify what are you going to do when you identify these new threats. And maybe you need to talk with your board and see what the risk appetite is for your organization. There's ways to address this, and it can be very complicated or it can be very simple. The simpler answer may be counterintuitive. If you have them, or if you say that you're not going to bank them, that's actually pretty complicated, because if you say you're not going to do it, you're going to have to not do it, and you're going to have to put a lot of controls in place. So those controls are going to revolve around people, systems, and processes. And as we know, finding the right people, training the right people, developing the processes to use the systems, all these things are pretty costly and they take a lot of time to implement. Likewise, you could choose to do a modified approach where you say, okay, if we operate in a state that has legal cannabis of one form or another, medicinal, recreational, you may want to say, we're willing to accept some risk and serve this market in a limited capacity. So what could that mean? Well, maybe we will not actively serve what we would call direct, or in FinCEN terms, the tier 1 CRBs. Maybe we will serve the ancillary CRBs, which would be companies that derive some portion of their income from the cannabis industry. Likewise, you could say, I'm going to take it all because I'd rather know about it and solve the problem, serve our community, make things safer for everyone, and embrace the change that is coming to our country. You then also have the opportunity to drive an increase in fee income, new membership growth, potentially expanding your lending as things open up, and take new risks and new opportunities that many of us today are just waiting to see what happens.
So what additional compliance considerations should a credit union that is deciding that, yes, we're going to go ahead and bank some of these businesses, what should they do?
Everybody is cannabis curious right now. That's the way I look at it, but it's not an easy decision to make. And I think that a lot of us are procrastinating, which in my opinion is probably not the right thing to do. The best decision to make is the right one. The second best decision is the wrong one. The worst decision is no decision at all, because regulators are going to expect you to have made a decision. So what can you do to create a culture of compliance that will help mitigate the risk? Like I said, You have two choices: to do or not to do. I'll start first with, if you're going to not engage in this industry, you need to update your policies to state that you're not going to do it. But I would caution everyone to put it in a creative method in your policies. Do not say we will not bank cannabis related businesses or their employees. Say we will not knowingly bank cannabis related businesses or their employees or the ancillary businesses that serve the cannabis industry. Making a declarative statement will get you in trouble when those people find ways into your institution. Second, with that is you're now going to have to update your processes. Are you asking all applicants to attest that they are not a cannabis related business or associated with cannabis in any way? Now, that looks good on paper because you could tell the regulator that you did it. Now, whether they tell you the truth or not, that's where the process needs to get developed even further. So there are systems now that you can purchase through third parties that will do screening for known cannabis related businesses and beneficial owners. So you may want to invest in something like that if you're really going to check every applicant to make sure that they're not involved in cannabis. Then you have to have another process of, what are you going to do to deny their application? What are you going to do if they do come through and it doesn't get checked, where you can't identify them directly, but then you learn about it later? You see transactions going on through their account that are from or to companies they're known to be in the cannabis industry, or they have a lot of creative ways to get around that, even lots of holding companies, cash intensive business transfers, ACH wire. Then you have to have a way to exit those people, and you have to have a way to do that gracefully but quickly. I'll stop right there for a minute, see if there's anything else, and then I'll go into how do you actually approach banking these entities.
Absolutely. I think that you made some really good points about earlier. You mentioned risk assessment as being one of the most important things, getting your board support. But you're right. Let's turn to those financial institutions and credit unions that said, okay, we have now talked to the board, we have the appetite for this, and we're going to start offering banking services and products to our marijuana related customers. So, what are some best practices for those folks who are now ultimately going to engage in those types of services?
So as I said in the conference discussion that you referenced before, I crafted this new term of KYCU. So you know your credit union. That's the most important thing, or know your bank. If you think you can do it, you probably need to look again, because it's not as easy as you may anticipate. So be very mindful when addressing your risks. There are firms or individuals that can help you craft a cannabis related business risk assessment. To develop your cannabis banking program, that risk assessment is going to be critical. And it should first start with understanding your organization, right? How compliant are you today when it comes to BSA and AML? And how have your previous exams gone with reference to money laundering? If you have any deficiencies, those need to be cleaned up and all your processes tight before you engage in this industry. Because while I don't believe that the risk of money laundering is abnormally high for a state licensed business in this space, the risk of money laundering through the ancillary businesses or through the gray market and of course black market is very high. So in essence, because they can't get banked easily today, many of them are technically figuring out ways to hide the source of their funds. So they are money laundering. Maybe they're not doing it with malicious intent today, but it is happening. So you got to be aware of that. And then once you've identified any gaps you have, now you're going to put controls in place. Controls come down to people, process, systems. People is really important. And here's something that, a little background, I've been working on identifying the potential of a cannabis related business program for my credit union for about 18 months. We still haven't done it yet. And in 18 months, I have gone through like a hero's journey of learning this industry, finding the right people who can learn this industry and apply BSA and FinCEN guidance to help your program is not simple. It's not easy. There's nobody who has a lot of experience in this, right? It's 4 years old in most cases to be able to even transact with cannabis companies. So I believe that if you are an institution and you want to do this, I wouldn't necessarily rely on our BSA team who's been working BSA alerts for traditional banking services for the past 10 years, because it's not all applicable once you start dealing with cannabis transactions. There's a lot of nuance, and that takes time to learn. So I would say before you say you're going to start the program, start training your people. Identify people that you know who can help you develop the knowledge to apply to your program when you're ready. Then you identify all the paperwork and all the questionnaires and all the checklists that you're going to have in order to onboard these companies and these individuals, but also maintain their account, because their transactions and the activity patterns, they're different than other businesses. What are you going to do for cash management? Do you want your businesses to come in with duffel bags full of cash into a branch location? No. So you're going to need to have CIT services associated with your program. So that's cash in transit, right? So armored courier. One issue is that the major providers of this service today that we use will not transact with cannabis businesses usually. So you have to go to a private company to do this. Vendor management, due diligence, very important. So all of those things roll up into it. And then what are you going to do to ensure those transactions are legitimate? Just because I'm a state licensed entity, I'm legitimate, hopefully, you've done due diligence. But what about all my vendors? This is where you get into the KYC. You can't just know your customer in this industry. You got to know your customer and your customer's customers, your customer's employees, everybody in this supply chain, which seems like a daunting task, but it's also a great opportunity, because if you can bank one MRB or CRB and do it in a good way, your reputation will be known, and then you can get their vendors and their employees. And now you're closing the loop. So you have a much better line of sight to what's really happening in your market with your customer and all the people associated with serving that industry. That is where I think credit unions in particular, community banks have a great advantage, because they know their community, they see these people in the public, and if you can identify those customers and serve them well, you can have a great opportunity to grow your program and gain a good reputation.
Yeah, and I want to know, what are some of the questions financial institutions should ask themselves from a strategic, reputational, and even risk perspective if they're going to begin banking these cannabis related businesses or MRBs?
Yeah, it's a great question. It's always a tricky conversation to bring up the first time. Are you, maybe you're in management or an executive and you think it's a great opportunity, you think you guys are willing to take the risk and learn. Now you got to talk to the CEO. So you talk to the CEO, you talk to the CRO. This is real, it's changing, there's a great dynamic, maybe we can participate in it. Convincing them that it's worthy of discussion with the board is the first obstacle. If you progress through that, you really need to know your state's program. Each state has an independent way of dealing with cannabis. So the track and trace systems may be different in California than they are in Connecticut. So understanding how it's regulated in your market is the first thing that you need to do. Secondly is knowing how big is the market. If you want to participate in this market, you could find that the cost of serving these will not break even in the revenue because your market may be too small. Comparison, like you can compare Nevada with New Mexico. New Mexico is medicinal only. It's really pretty close to monopoly in that market. I believe there's only 15 operators that do all the medical marijuana for the state of New Mexico. Whereas, Nevada, there's a lot more competition. It is an open market, meaning it's recreational use, and there's, by virtue of the size and scale, more opportunity for financial institutions to compete, and you can gain fee income from that. So if you had 50, 100 MRBs and they're paying some nominal fee, could be over $1,500 a month for your compliance fee, that'll add up. Then you have ancillary fees, wire transfers, overdrafts, all those lines of credit, anything like that. They use a lot of those. So it's a good fee income generator. So you need to think about those things in comparison to what your objectives are. If it is a revenue objective, there's an opportunity there as long as your market can sustain it. If it is more of a social good, which I think is important, then maybe you're just fulfilling the mission of your financial institution. I'm a credit union. We're here to serve our community in the most efficient and effective way. So getting cash off the street and helping local business owners really helps our mission. So those are important things to know. And then talking with your regulators, and I can go on. I'm telling you, this is a deep conversation.
I love it. That's why we're having it here today. And I'm also not surprised that Nevada has a highly competitive market. But so, as you mentioned, the cost of banking these types of cannabis related businesses can be quite high, and pun intended. And you need additional due diligence, training, risk assessments, risk management, etc. So I heard you say you've been working on your program for about 18 months now. So have you seen the cost increase? Do you think this is true? And are there other cost considerations for banking these types of businesses or having these types of relationships at your financial institution?
Costs are key to these programs. They have to be efficient. They got to be effective, right? So the best way to manage cost is to use technology. And there's a lot of great opportunities in technology. This is a burgeoning industry and people are coming in to solve the information gaps. So whereas those who started banking cannabis maybe say 4 years ago, they had to rely on a very manual process, big worksheets in Excel, lots of phone calls, checking in with the databases from each state to make sure the licensee is still active and hasn't been voided or invalidated in some way. And it took a lot of human resource to do these things. Today, there are third-party companies out there that will integrate with the state databases. They will do the due diligence checks and track and trace for all cannabis transactions, and that will help you to develop efficiency in your program. The area that there has not been, at least to my knowledge, a lot of improvement on is your AML transaction monitoring systems that you have attached to your core today. Most vendors have worked hard to meet the demand from their clients, us, in saying, let me know if I have a cannabis related business, so alert on it. And with mixed results, you have those companies providing that information through the monitoring systems. The problem becomes if you start to choose to bank this, now all those alerts are working against you. And so curtailing or augmenting your AML transaction monitoring software is important because you're just going to have a litany of alerts every day that your team's going to have to address. And that's not today a great option. The other thing is, back still on this, is that while you can have automation to help ensure that the licensees their license is still active, that negative news searching is happening, which is very important. You need to ensure that you're regularly checking for any kind of negative information about the owners, the beneficial owners, the company itself. Your AML monitoring system, you still need to use it to identify the threat of money laundering through these accounts. So you're still going to have analysts looking at these accounts, making sure that what they're doing adds up. So if they're a grower, they have a harvest, say 4 times a year, they get a large amount of cash into their accounts 4 times a year, and then it all pretty much goes out because they're farmers, they got to pay for the next crop. But what happens if you're looking at it and their cash deposits are coming in all the time? or in a weird kind of sporadic way, which doesn't align with what their business does, which is producing cannabis products on a cyclical basis. Where's the money coming from? Why did they need to get this money? Was it an investment? Was it, illicit sales out the back door? That's where your team has to be really engaged in identifying those transactions and then communicating with these companies and these owners. You have to come out the door and say, we're going to build a relationship of trust but verify, right? Our teams are in the anti-deception business. If something doesn't look right, we got to report on it. And if it still doesn't make sense, then we need to take action to maybe let these people go back to the wild.
Absolutely. Spoken like a true risk manager. So I know I have seen lately a lot of guidance from our regulators on cannabis, hemp, marijuana related businesses, and so forth. But is there anything else that you hope to get from the regulators in terms of guidance so that you can feel more comfortable in this space and can do a better job of serving your members?
Well, that's a great question. And this is a very auspicious time because as we're recording this, it's the day before the election. A lot of opportunity will come in the next few years. I'm not saying it has to go one way or the other. It's a decision that has to be made. Like I said earlier, you can't procrastinate anymore. Federal government is going to have to take action. We have 34 states plus every U.S. territory and D.C. that have made the choice to allow cannabis into their communities. We have 4 on the ballot right now. So that momentum is coming, and I don't think that this train can be stopped. So what would be beneficial for us in the financial industry? I think there's kind of 3 paths. There's the most likely, the probably a dream, and then the least impactful. So most likely within the next 18 months, we'll get some version of Safe Banking Act out of the House, or it's already out of the House, but through the Senate, and we will get some safe harbor protections for banking these companies in states where there are laws regulating cannabis. There was a lot of momentum for Safe Banking Act, and we thought it might have gotten heard by the Senate in 2020, but COVID kind of reorganized priorities for us. So that one I think is more likely than not going to be addressed within the next 12 to 18 months. Depending on how the election goes, you may have the big change, which could be something like the States Act or the MORE Act. So Kamala Harris was a sponsor of the MORE Act. That is a huge restructuring of cannabis and a lot of the changes to how law enforcement will deal with cannabis, and then also what has happened as restitution for people who have been prosecuted in cannabis-related crimes. So if that happens, cannabis will be descheduled. It will not be a Schedule I drug anymore. And that would open up everything pretty quickly. Obviously, you got to wait for regulation, but that'd be a big one. Then the other one, which would be good, probably not going to happen, is the States Act. States Act would basically say, if there's a state that chooses to do this, the Department of Justice can't use federal funds to go try to prosecute companies within that state that are engaging in the cannabis industry. Seems like a fair deal. It would open up a lot of information sharing as well. So those are the 3 big ones that I would consider, which may happen sooner than later.
Well, Tim, I know this is a topic that is near dear to your heart, and we could talk about it for all night, all day, right? Because it's so much to go over. But fortunately, that's all the time we have for today. We can't wait to see you on our next episode of Ncast.
It's been a pleasure. Continue on with the risky business.
Hey, thanks everyone for listening to this episode. If you like what you heard, we'd love it if you would hit the subscribe button and leave us a review on your favorite podcasting platform. And if you'd like to get more information on the different types of risk in your own financial institution, there's a ton of great resources for you waiting on our blog and in our resource center at www.ncontracts.com. Thanks for listening, and we'll see you on the next episode.